Good evening, everyone. It's Jeremy from Trading Safely. This week, coming to you from Melbourne, Australia. Down here, seeing the family. Just found out my brother's having a baby. Pretty exciting. That aside, it's been a pretty interesting week. Gold turned around. Euro had a crack lower at some of the lower weekly pivots and held. Dollar index did the opposite. Bond market's starting to look weak again. US equities are up towards highs, getting overextended, but still no reason not to be. Still no reason to be selling. So we're going to go through all that tonight, and we're going to have a look at the signals that came up through the week, and just see what came up this week. Thanks for joining us. If you guys can hear me, can you please let me know? Someone could kindly come down the box and just say, yeah, I can hear. Noting that many of our listeners are obviously in the States, so but if you can hear me, that'd be great. Tonight we've got Shaun Downey with me once again. Good morning, Shaun.
Evening, Jeremy. It was a pretty interesting week last week. We're always interested in month ends and quarter ends and stuff like that. There's a few things just seem to go straight from the start. I think the main takeaway was actually last Friday week, where the bond market sort of closed, and it has a little short session, about half an hour, and it dropped half a point. No real volume, and that created a load of sell signals. Just goes to show. And so, as you said, the bond market still broadly in sideways, but was weak through the week, and I've been short and put some cover on Friday. There is actually something very big going on in bond markets in Europe. So that actually I thought Europe was a bit more interesting than America this week. But a thing called Euribor, which is the 90-day interest rate in Europe. So the equivalent of Eurodollars in America, short sterling in England, and you've got Treasury, you've got T-bills, haven't you, in Australia, had its biggest one-day move in well over a year. So the futures went down, which implies interest rates going up. Now, interest rates in Europe are below zero, a long way below zero, and so there was something a little bit seismic there, and I'm keeping a very close eye on it to see whether that's showing a change in the interest rate cycle, which would be significant, definitely for bond markets. One thing everyone's really got to remember: there's a lot of cliches and a lot of myths and mantras out there, and one of the ones is that if interest rates go up, stocks go down. That's not actually true. Sometimes interest rates go up and stocks go down, but certainly not all the time. So don't get married to the view that interest rates are going up, so that must be bad for stocks. It doesn't necessarily work like that. So we just let the chart tells us. We don't tell the chart. The market comes to us. We don't go to market. So they are mantras that should be observed, and we just see what the charts give us and trade accordingly.
Yeah. So look, if you're logged on tonight, there's a good chance that you're watching because you're committed to changing your financial future. Look, there's a plethora of trading indicators out there, and if you're sick and tired of those, well, this is a webinar for you. If you want to get expert opinion on global markets, come to the right place. Shaun's been in the game for 37 years, very well known, and I've been in for 15. This webinar is for you if you want to get an unfair advantage over almost every other investor out there, and we don't say that lightly. And the way we see it, the more you watch and track what we're doing, the more likely that statement is to occur. And look, please feel free to ask questions. That's what we're here for. Obviously, we can't be live for the world, but we are here to answer questions. So feel free to put your hand up if you are listening. You're definitely going to see cutting-edge trading technology in action, and I mean, it is quite unique. I've been watching markets evolve for the last 15 years in the way there's only a couple of people that really sort of look at the relationship between time like we do. It is unusual. There is a lot that you can get out of it if you're prepared to put the time in. And look, if you're just an experienced trader who's looking for an edge, come to the right place. And finally, if you want to learn how you can become one of our online community, we're going to show you that Facebook site and the sort of information that we offer up to our clients. Just a little bit about Shaun. Shaun, do you want to introduce yourself, please?
Yep. Been trading since 1979, 16. Traded all asset classes. Broked. 7-8 years writing daily technical commentaries, mentoring and coaching professional traders for 25 years all around the world. I've written a couple of books, just finished another one, and created a lot of my own studies, which are in the first book and which are the basis of what clients see today with your help. So semi-retired now, help my wife and daughter with their doggy daycare business and keep my professional clients up to date with what the software is telling them to do. So I'm a glorified alert service for them. I tell them what they, make sure they're not missing anything, and tell them what I'm doing as well. And now taking that same thing to the retail market and the stock market. So that's basically it.
And myself, I've been a professional trader for 15 years, large focus on energy markets, and more recently in other global markets, having worked at Optiva Australia, which is a leading proprietary trading house for many years. And today, still trading and working with Shaun and sharing and celebrating what we've learned with the rest of the public and our clients. So we do hope you get something out of this. You are going to learn a lot, and please grab your pen and just pay attention, because there's a lot of good information coming your way in the next sort of, I reckon, 40 minutes or so. While we have a quick chat, could everyone please read this general information and disclaimer? It is important without making any promises. So Shaun, what's probably the highlight, just while people read this? Shaun, what are you looking for this week? What you got your eye on?
Well, I think it's whether that late move in the dollar, it was very weak late in the day, and we had a big move in the euro, which created a daily buy signal, but it didn't go far enough for us to get particularly bullish on it. So when you get a move late at the end of the week like we did, and the market's a little bit thin on a Friday night, I'm very interested in the price action by Monday night, because was that move for real or was it nonsense? And by Monday night or tomorrow night, we're going to know. So if the euro follows through, then it could be taking out some levels above. I've said it before, everyone's bearish of the euro. It's a very, very crowded trade. There's all sorts of problems going on in Europe. We've got trouble in France where candidates are potentially being sent to jail, and I mean it's part of the course for France a little bit, but so there's those things going on in the background, and of course everyone thinks that's bearish for the euro, so it goes up. So I'm watching that closely. As I said, the Euribor and the European interest rate market, we had a really unusual move on Friday. We might have a look at a bubble chart. I think that's worth doing, because that broke out higher and then given all of that back. So it looks like a real blow off top in the short end of the curve in Europe. So interested in that. Whether bonds can...
Sorry, just for anyone who's not heard of bubble and the short end of the curve, Shaun, do you want to just quickly explain what that is?
Yeah, the bubble is a great name for a market, really. It's the 5-year European interest rate. So the equivalent is the 5-year note in America, and the short end of the curve. We have a thing what's called the yield curve. So the yield curve goes all the way from, if you put your money in the bank and you held it overnight, what the interest rate would be, all the way out to buying you can buy a 50-year bond. And so you have all these different government interest rates in between. So in America, you've got 90-day, 2-year, 5-year, 7-year, 10-year, T-bonds 20-year, and then an ultra bond, which is 30 years. And so when I talk about the short end of the curve, I'm really talking about from overnight money, probably out to 5 years maximum. Yeah, and then when you talk about 10-year money and above, you're talking about the long end of the curve.
Okay. So I think first of all, we're just going to run through some of the stocks that popped up in our Trading Safely online community, and some of So this is a little snapshot of the online community. We're constantly putting out great information and data and updates. We did an update on the close on Friday. Shaun was putting out information on healthcare. There's lots of chat. We're covering a few main markets. So right now we've got a daily chart of Caterpillar. The lines that you can see, well, we have what's the best description? We basically have long-term support and resistance here is what those lines are. This pink line here is the previous month's close, which is often an indicator of if you're above it, the market's bullish, and if you're below it, the market can tend to be bearish, as you can see. And this big orange line here is just the annual close, which we don't typically need. I might just take it out for now. But and then at the bottom we have what's basically tracking multiple time frames. So key levels from many different time frames, from annual to quarterly. But very important to always look at the big picture. Very easy to get stuck looking at one time frame, and that can get you in trouble if you're not cognizant of the higher time frame. So Shaun, Caterpillar came up this week. There's a plethora of sell signals up against this key resistance level that's automatically predetermined for you. Shaun, over you on Cat?
Yeah, it was interesting because Cat has, which is Caterpillar, so they build tractors and heavy plant, been people are new. We talk about fashionable and unfashionable, and it's been a very fashionable stock. And what I mean by that is it's been in a very strong sector, and really got pushed higher, as you can see, over the last nearly a year. And when that happens, it becomes a crowded trade after a while. And I'm going to talk about banks a little bit later, which is the number one crowded trade at the moment. And gradually what happens is everyone knows what the story is, and it just loses its momentum and it starts drifting. So instead of being fashionable, it just comes out of fashion. And as a sector, Caterpillar, which was, I think, number 2 out of 197 not that long ago. If I just check, I think it's around 150 now. So there's 197 sectors, and Caterpillar has come off significantly. So the market's been going up, and Caterpillar isn't, is it? It's just stuck in sideways. And the thing that was interesting to me, I put out the note on Thursday morning before the market opened. And the reason why I did it is we'd had the sell, and then you can see that the price went back up towards the highs again. And that's because the market's been very strong. Yeah, they liked what Trump had to say on, I think it was Wednesday or Thursday. I can't remember what day he said what he did. And so it made a very low risk sell opportunity because the price had come up back to the original point. And what happened is sometimes stories conspire in your favor, and literally, I think about half an hour after the stock opened on Thursday, it came out with a story, and I don't know if the FBI or some government agency had raided their offices, and so they had to put the story out, and the stock just slumped immediately. What's interesting is, where did it actually go? You can see you've got that annual line there, 92.74, and it wouldn't surprise me if that was the low to the tick, or it's pretty damn close. So got a bit of what I call a Brucey bonus. People in England would know what I mean on that one. You sort of, when you get an unusual story like that, and a somewhat fortuitous one, you probably take a little bit of money off the table straight away, because we don't really know what's going to happen. If CAT closes below that annual line, yeah, 92.67, then you can see that there's a lot of space for it to fall. That's another thing that we're very big on, is whether there is space, room for something to go up or down. And there's a lot of space below. So the position is still valid, but we've got to close below 92.74.
Yep. Other codes, Shaun, that came up through the week?
Just some other ones that were updates from previous positions. So you got GKN.XLON.
The GlaxoSmithKline in London?
No, they're called GKN. Doesn't actually stand for anything.
Okay.
Yeah, can't remember. And it broke out as a buy signal, and then it broke out on Tuesday, and it's just extended higher. And on the same day as that original signal, if you do DGE.XLON, which is Diageo, which they own Guinness and lots of different alcohol. Not quite sure what, I know they own a lot of stuff, but I know Guinness is one of them. That came up with a sell signal on the same day. So we sometimes get opportunities to be long and short, which gives you a little bit more of a balanced portfolio. And you can see where that sell signal was a couple of weeks ago, and hasn't really developed, has it? We haven't been stopped out, but the market's just drifting higher. But actually, in comparison to the overall market, so the FTSE's actually been very strong. Diageo is underperforming. So I would look at that and say, well, if the overall index starts to fall, then Diageo is in all likelihood going to fall. It's going to underperform even more. So one side of the position is doing well, and the other side of the position is losing a little bit. But on balance,
just for anyone that's tuned in for the first time, again, not all of these signals are signals we act on. This isn't an algorithm where you just follow every signal blindly. Okay, it couldn't be further from the truth. We cherry pick signals. That's what we do, and we let our clients know what we think are the better signals. So please don't think that all of the arrows there, the buy and sell signals, are ones that we act on, because it's not the case. Interesting, just looking at that Diageo. Looks like it just closed under last month's close there. So very interested to see Monday's action there.
Yes. Another one that came up through the week was WAFB. That's in America.
WAFB.
Yeah, B for brother. I think that's it. Yeah. Now, this is within a. Hold on. Is it FB? Hold on. Old person's moment again. Sorry, WAFD, D for drive. Right, so this is Bank Super Regional. So our client base got a report from me yesterday, and this is the number one sector. So this is top dog, number one of number 197, and there's, I think, 12 banks within that within that group. And what I'm interested in is seeing which ones are the leaders within that group and which ones are the laggards, as it were, and WAFD is one of those. So you can see there's really two things that are coming up here. The first thing is you can see that lines that were below price have all moved to the top. So what we say here is that the market has created resistance based on its own momentum. So it's going sideways. You know, it's in the strongest sector and it's not actually going up, which immediately tells you it's not doing very well. And there has been a sell signal appear, and it's close to breaking that nearest support. It didn't quite do it on Friday, but it's looking distinctly dicey. If you then call up SIVB, that is B for brother.
S or F?
S for sugar. Yeah, S for sugar. Now this is the strongest stock within the sector. So WAFD is the weakest, and this is the strongest. And we've moved, had a breakout on Trump back in November, and it's just been extending higher. And on Wednesday, it's a little bit difficult to see, but there's a gap high. It just gapped up about $7. And then what happened was it gave all of that move back the following day. And what I'm looking at is what I would call, or the market would call, a blow off top. Yeah, so you get some sort of exponential move that gets reversed very, very quickly, and effectively that's what this one did. If you put the slam dunk power play study on, you'll see all of the trade safely has indicators that are the drivers underneath it. And if you no, don't put that one. It didn't come up on SIVB. If you do, I think KEY. So within this sector, let's just check. Just gonna Oh, sorry, do USB as in the USB port. So in this sector, you can see that they all gapped higher on the on the Wednesday, and then they've given it all back the following day. And what it did was create what's called a slam dunk signal. I'm not quite sure why it's not coming up on yours. Have you put it on?
There it is.
There you go. There it is. Yeah. So it's a green square where there's one on the breakout in November, and that will qualify as a buy signal because there was no resistance, and then we've edged higher. We've gone a lot higher, and then on Thursday it created that slam dunk signal. So that's a warning sign. Now the difference between WAFD and USB or SIVB is where those support and resistance lines happen to be, and on these stocks they're still underneath price. So we haven't built resistance based on its own momentum, and that's what I'm waiting for. So that expansion of range, and this is where we're very much proactive. Don't like being reactive. Reactive creates all sorts of psychological problems. You need to design indicators that are proactive, so you know what they're going to do or how it's setting itself up. And because of that expansion of range, I know that it's extremely likely that resistance is going to move to the top of the trend. So the peak expansions on the weekly higher time frame are in all likelihood going to move higher, but it's going to take another 2 weeks because of the way we create that indicator. So that's what I'm waiting for. Resistance goes to the top in a couple of weeks' time, and then we wait for other signals to tell us that financials are no longer fashionable and they're going to start drifting back down. It could be that could already be short WAFD because that's already underperforming. Yeah, but for the index to really start falling, we need some of those high performers to start breaking down as well. So very much into financials, really watching it. Even the very big stocks like something like JP Morgan that produce sells as well. Yeah. So it was across the board really.
Interesting when you look at it from a range relativity perspective. It's overdone there as well. We've got the monthly upper pivot outside of the quarterly pivot. That's an excellent place for a market to be tied, and we'll be looking for a close under this weekly pivot next week as well to be another nail in the coffin. So that's a good spot for a market to turn down.
Yeah, just check WAFD. I'm pretty sure it didn't quite do it. It certainly didn't quite break the final support point. But of course, you can see it created a slam dunk signal. So even in sideways, it just got slammed along with everything else. And the important thing to remember, this is the first trading day since the election that financials have been hit. So it's been 5 months. So patience is definitely the name of the game. So did it close? No, it didn't quite do it, didn't it? That's pretty close.
Just looks like it just held that lower pivot,
yeah.
But the other one didn't.
Right, other ones that were this week is SIG. So these were, we get signals where we're looking for fashionable stocks to become unfashionable, and then we're looking at the ones at the bottom. In the bottom 10 sectors, apparel, clothing, I'm very interested in. It's just not setting itself up at the moment. One of the things that's happened is the market's been so strong that even the weakest performing sectors, the stocks are still going up. They're just not going up as much as everything else. But there are a few things out there that are seriously underperforming. And this SIG, which is Signet, which is a jeweler, and I'm going to show my age here. This is a really old story. Signet used to be called Ratner's in England, and it was a terrible name for a jewelry store, really. And the guy who owned it made one of the worst ever public statements that anyone has ever said, and basically said, "Oh, all our jewelry is crap." Yeah, he said it live on TV, on some 7 o'clock show on BBC or something, and they effectively went bust. He had to resign the next day, and no one went to the shops. Just one of the most craziest, stupidest things that anyone could ever say. And it sort of rebirthed itself, phoenix from the flames, and turned itself into Signet. So it's a jeweller's, and you can see it's really underperforming. It's been going down most of this year, and then on Tuesday it broke down again. So it broke the final support, created a slam dunk signal, which is that red square, and it's also the blue triangle. And even though the market performed very well this week, so we went up. As you can see, Cygnet's just going sideways, but it's broken down. It's easy to know where we're wrong. Another one is MCS, and this is the sort of it hasn't given us a setup yet, but yes, it has. Yep, thought it had. This is the thing that I'm really interested there. If you see that those support lines were way lower. Might have to change the scale a little bit, and they've moved all the way to the top. Yeah, so they're from way back. Yeah, so we had all those horizontal lines for that huge amount of time, and then they jumped to the top. So whenever we see that, the longer that a line hasn't changed, the more significant that change is when it occurs. So we've moved to the top of the trend. See that we had a sell signal a few days ago. Again, it's got a it performed poorly on the week. If you think of the market going up, and it went down, I think 4 days out of 5. It's still got some support levels to take out that we're interested in, but it's another one that's underperforming. And the last one is AM for mother, TD. And this is a little bit of a connection of technicals with fundamentals. Whenever we get a signal, I don't spend too much time on it, but I just always go and have a quick look. Is there a story? You know, is there something that's making it that isn't necessarily results? If results come out, I'm just interested whether they beat or they missed, and what the price action did accordingly. So bad news, good action; good news, bad action. I was interested in that. What happened here is this is an online broker, so like Charles Schwab, a few those sort of areas. There's a price war on commissions, and they announced that they were dropping their commissions by about 30%. So it's a lot cheaper to trade, which is good for all of us, for people in America, and that's what caused that price to gap lower. What's interesting there is it gapped lower, came back up the following day and failed at that blue line. So what was support was broken, it came back to it, failed, and then it's gone back down again. So there is space for it to fall. There's a reason why it's fallen, and it's very easy to know where you're wrong as well. So that's some of the signals that come up this week.
Very good. Now just switching back over to other markets. I might just have a quick look. I like to do a weekly scan of the pivots. So for anyone new tonight, we have a number of different ways of analysing markets, and all of them involve time, which is one of the unique features of our studies. We look at pivots across time, which effectively give us a sense of, well, think about pivots as like being a ladder. You can climb up a ladder, you can climb down a ladder. Now the key is to think about that across many time frames. We'll get to that. We also look at support and resistance. So these are the pivots here. I'll go into those in more detail in a little bit, but we also have this concept of key support and resistance levels. We analyse markets from using different price points from much higher time frames on a closing perspective or a midpoint perspective, and when we tie all of those things together, we can often come to a reasonable conclusion on what we think's got a highly or statistically significant outcome. So just moving back to, I've got gold. I know we've been following gold very closely on the Facebook online private community. So if I just put in the pivots again. So for anyone new, all these different colors reflect different time frames. So the yellow, we have an upper level and a lower level, just to highlight. So there's the upper weekly level in yellow, and there's the lower weekly level. And then the same for the monthly. We have an upper monthly level in pink, and then we have a lower monthly level. And then we have an upper quarterly level and a lower quarterly level. And then we go all the way out to annual. Now what we're interested in is where the market is closing in relation to each of those time frames. So, if it's a monthly, if we're coming into the end of the month, well, I want to know where do we close in relation to the end of the month. And then, you know, right now we're just coming into March. So guess what? The next time frame is the quarter. So I'm interested in where markets are going to close relative to the quarter, which is this brown line. So, you know, you think about that ladder concept. You know, if the market's going to go up on a quarterly time frame, then really it should be closing above the upper pivot. If it's closing below the lower pivot at the end of the quarter, then there's something, you know, the bias is definitely down. And you can do that for every time frame. So what we've been saying for gold is that, well, and we looked at the yearly perspective, then the market actually closed in the middle of two pivots, so it was neutral from last year. But in the short term, when I look at these two brown pivots here, we closed all the way down here. So we had a bearish bias for the quarterly time frame. It was oversold, and the reason why it was oversold was because these monthly pivots in pink moved outside this quarterly pivot. And that's a very different situation to here, where we see those pink pivots that are inside the quarterly pivots. Right, so when I see these little pink dots, they're telling me that the market has a chance to turn around. And so right now with gold, you know, what we said was, well, these pink dots are appearing. This is a place where gold can turn down, and sure enough, it has. And this week, you know, we closed under this lower weekly pivot, so it tells me that the probabilities for the market to be moving down, it has a bearish bias. We are coming into the end of March. Here is the quarterly pivot. So that's the upper one, and here's the lower one. So should we close underneath this 1226.5 at the end of March, then the higher time frames are still down. Not forgetting that we closed last year underneath this quarterly pivot. The gold at the moment has a bearish stance. There is nothing bullish right now. If there was, it would have taken out the upper monthly pivot. Now, don't forget, you know, the current contract is actually the March contract. And when
no,
you
it's
look
April. It's April.
Well, I think the March is still around though. It has rolled over.
There's no volume in it. There's no volume in it.
Oh no, just from a range deviation perspective. Though.
Oh, right,
so
fine, yeah.
From a pivot perspective, you know, the pump contract's always the one I want to keep an eye on at the end of the close until it does finally roll over. So we had a weekly sell on gold. It is bearish at the moment until we start closing above, at the very minimum, this upper weekly pivot, and we'll get those new levels on Monday. So gold's doing what we expected it to do. In terms of support and resistance, you know, I've taken out, we've got a critical level around here at 1220, and then there's sort of gaps opening right up. So gold closes back under this 1220 zone. You can probably expect it to drop fairly heavily. Just having a look at some of the closes. Yeah, so right now we're trading under last month's close, which is that pink level. There's a gap here. So what we're seeing is gaps opening up around the place. There's last year's midpoint at 12.19, and then there's nothing. So there's about 3 or 4 different studies saying gold on a close under that 1220 area is probably going a fair bit lower. So
I think the other thing there is not only will it go lower, it will do it quickly because there's space. So it's also velocity as well. So that proactive nature of things tells us, yes, okay, it can go up or it can go down, whatever, depending which way we are. But that element of space tells us that it can do it quickly. You know, it's the sort of thing, you know what gold's like. You could do it 1 day or 2 days if you wanted to. You know, gold is a market that's capable of very, very big sudden moves. Algo pops, as I call them, they'll trip over each other. So definitely negative on gold, no doubt about that.
We go to the Dow Jones now. Dow Jones has not given anything bearish officially yet, although there is some signs of a lack of momentum building. So why do I say is there a lack of momentum building? When we look at the weekly pivots, last week we failed to close above that upper pivot. This week failed to close above that upper pivot. And now also we're seeing this upper monthly pivot above this quarterly pivot. So here we can see that the pivots are inside this brown rectangle. But when they move outside, it's telling you that it's possible for the market to close down. Now the contingency there is where the market closes. Okay, that gives you the confirmation, and so you can see right here on a Friday just how hard it tried to close back over it, but it couldn't. So for me, it's like, well, you know, I wouldn't want to be coming late to buying this, but at the same time, you know what, I haven't got a sell signal either. There's just a, so don't stand in front of the train. If we look at the peak studies, I haven't seen anything move to the top yet. Well, actually, beg your pardon. Looks like something has moved to the top, Shaun. That's only just come up, so that is interesting.
That's a daily one, yeah.
Yeah, that's a daily.
Yeah.
So, folks, there's a little bit of a warning sign building here. We've got pivots overextended at the monthly level, and now we have, you know, that's the first time this line's changed since early December, and we have missed the upper pivot for 2 weeks in a row. So, look, if you're trading with the trend, you shouldn't be selling the Dow because bigger picture it's going up. But there is a sign here. If we get a sell signal coming through on Monday, I would not be surprised. So, I wouldn't be jumping in here from the long side, that's for sure. But there's signs of lack of momentum building for sure. That's interesting because it coincides with the Euro stocks and the Euro indexes. Share indexes are right at the top as well. Go to the Euro stocks. No, you raised this on the Facebook, the private Facebook community site, Shaun, Euro stocks.
Yes, I put that out. There was a major buy signal on the Wednesday, and you can see it's making new highs. And it's what I call a bull trap, which is something that happens on the upside. So every technical analyst out there are all going to say, oh, yeah, it's making new yearly highs, blah, blah, blah. Highest it's been for God knows how long. It's a major breakout. And unbeknown to them, there's a level just above that's a trap, and it's at 34.14. Which is a monthly level and an active continuation, and the high was one tick above it. I actually went short. I just said, okay, I'm willing to trade. I had that order in as a GTC for a long time. So the really big monthly levels, especially if they're a false, what I call a bear trap or a bull trap, I'm quite happy to just trade that. So I'm short at 34.12. If we close above 34.14, I'm out. You know, it's very easy to know where I'm wrong. But as you can see there, that's another reason to think about being short, is that the quarterly pivot is just lurking above as well. I think it's at 34.23. This can be a classic situation whereby everyone gets sucked in. You know, somewhat old-fashioned technical analysis just tells everyone to buy the breakout, and then there's a trap, and then the market reverses, and that can create a violent move because short-term traders are long and wrong, and they head for the exit pretty quickly. So very interested in what happens tomorrow and Tuesday. There is some background info again towards where you connect markets together, the Euribor, that sort of stuff. Is that going to suddenly come into the market's focus in terms of European equities? So if you do DL, just quickly, if we just look at that one, that's the bobble, the 5-year, and this had like a blow off top as well, the same as those banks. So very, very strong over the previous week, and then there was a sell signal on Tuesday, I think, but it wasn't a resistance, and then it's just collapsed, and it's actually a big move. So there you go. So you can see there, made new highs the week before, really, really strong. You got a double sell signal, and then it's giving it all back. So just down every day last week. So that signals what I call a blow off top and a false breakout. And this is where the beauty of those pivots come in, because it was coming into those resistance areas. It had been up for 7 weeks with those pink dots. It didn't quite make it to that level, but we already knew that the market was overextended in price and time, and it's giving it all back. So Eurostoxx is pretty interesting, to say the least.
Yeah, so guys, these little white dots here, they come up when the weekly pivot, the upper weekly pivot is above the monthly pivot, and for so that's at that point there, you're thinking, well, okay, that's a place where the market can come down from. And sure enough, it happened the next week. I mean, the confirmation would, when you see that, is if it closes under the week, under that lower pivot. It didn't.
Which it did. No, it did this week.
No, it did this way, yeah. But here, this is another situation I want to highlight. When you get this, it's why it's important to wait till the end of the week sometimes, because, okay, it's overextended again, but look at the close. It closed above, so it can keep going. But then now we had the quarterly pivot and the monthly pivot. The monthly pivot with the pink dots means it's over the quarterly, so it's overextended. And then we had this, it couldn't even get near the weekly pivot. We had a weekly sell signal and a daily sell signal, and now we're closed this week under the lower pivot. And that is the first time in 1, 2, 3, 4, 5 weeks. Well, yeah, a long time anyway. So that is a really bearish confirmation.
Yep.
Moving on to have a look quickly at dollar index. To me, it's still in a bullish formation. Sure, it had a sell signal on the Friday, but it hasn't done any damage. Keen to see, last month it closed above its upper pivot, so the upper monthly pivot, so the higher time frames are still in play. Let's just take a look.
Yeah, just while that's coming up, I had a quick look at the S&P, the E-mini, and that also moved its daily to the top, the same as the Dow. The Nasdaq hasn't. So another warning, the first warning signs on US equities that they've managed to build resistance based on their own momentum. So,
okay, guys. So
careful out there.
Yeah. So that is the first time in a while. So we've got a warning out for equities this week. I'm not suggesting you go sell it because the bigger trend is up, right? So dollar index, look, at the end of last year, it closed in the middle of the two orange lines. So neutral bias, but it has closed above the semi-annual and quarterly, so it's got a bullish bias. Last month, it closed above that upper pink one, which is the monthly. So the longer term, it's still got a bullish bias. These pink dots tell me that it was overextended on the downside, and that's why it's been moving up. There's no damage done here on this sell signal. It would have to have closed back under this lower weekly pivot for me to be vaguely interested in getting short the dollar index. So let's just keep an eye out for the weekly pivots next week. The euro is probably going to tell you the exact opposite story. I know that the lower weekly pivot coincided with a major support level. The market bounced off it. It failed to close back above the upper weekly pivot though at the same time. So it's really a matter of whether the euro can get on with it next week. The first thing you would do is probably just delve into the, if in your chart IQ, just go down to the daily pivots, see if it can start taking out the first up on the daily time frame. But here, look, there's no really conviction in this signal at the moment, other than it avoided what was going to be a fairly extremely bearish signal for the euro. So let's just wait and see. It didn't close up this weekly bullish, so I'm indifferent to the euro at the moment. But big picture, it's still bearish in terms of the fact that here's the quarterly pivot from last year, and here's where we close. So when you start closing underneath these pivots, well, it just tells you long term the trend's been down. So it really needs to close March above this upper pivot here at 107.17 for me to start thinking that there's any life in the euro. So that's 3 weeks away. Let's see if it can close above this upper pivot, but gets rejected here. I mean, we've got that interest rate decision coming up from the Fed. If they raise rates, there's every chance that the euro just gets nailed because the dollar index will be going higher. Shaun, what do you reckon?
Yeah, I think if you put the weekly and monthly support lines on there, I think it was pretty close to a line on the downside as well. It basically dodged the bullet.
Dodged a massive bullet, so you can see this.
So there's that red line, yeah. So that was a decent support point. The other thing I want to point out here is a lot of what I would call old-fashioned technical analysis. You read a report and they'll say that support and resistance is an absolute high or low. which of course, as far as I'm concerned, is complete nonsense. Who traded at the absolute high or low? Well, effectively no one. And what I really like about that red line there is it's not at the absolute low. Yeah, so it's a hidden level. As we know where the support is because our analysis is cutting edge, but the market doesn't know it. And whenever I see a line, a major weekly or a monthly line that is not at an obvious place, that's when I really potentially like it. And so the market came down to the weekly pivot, which coincided with the final major support, and bang, if it had broken it, it was very, very bearish. As it is, it's dodged a bullet, rallied very strong. You can see the short covering on a Friday night, really. It rallied nearly 100 in the last few hours. Everyone's short the whole week. They've all been reading French stories, and then they all get kicked out. So what happens tomorrow and Tuesday is very important to see whether we get any follow through, or whether it's a bit like the banks, gives it all back again. So that connection of support and resistance with time is very, very powerful.
Yeah, and that's a really key concept, guys. As you need to be cognizant of where you are in relation to time. So for instance, when it's the end of, well, like where we are right now, well, what's the next target in time? The next target in time is now a quarter. So for me, I'm now interested in where price is in relation to the quarterly pivots, because I can tell you from what I've observed using this pivot analysis is that as you approach the end of the time period, or as you come into the end of the week, or as you come into the end of the month, or as you come into the end of the quarter, you can guarantee that very frequently the market will go and test those levels. So just something to be aware when you're looking at the range relativity study on the ChartIQ setup, coming into the end of the quarter, so the quarterly pivots are in play. All right, so that's why I'm a little bit not surprised that we are maybe heading back up to check this out over the next little bit. If that turns around and fails at this quarterly level, given that we closed down here at the end of the year under this lower quarterly pivot, then that'll be a major rejection and the euro can turn back down. Conversely, if we're closing above this upper pivot at the end of March, well, I'll be scratching my head thinking, well, geez, looks like it's starting to go up. But
well, yeah, everyone's short. It'll kick everybody out like it's done a few times over the last couple of years, and then you know, which can happen.
So yeah,
pretty interesting.
So with the pivots, always think of the time period that's coming, because they're like magnets. They will zoom into them right at the end of the period. I see it so often it's not funny. Like here, right at the end of the month, it comes and tackles this level. But just something to be cognizant of. Aussie dollar broke down. I've got no doubt that it's going down to have a look at its lower quarterly pivot, because it's had such a bullish run up. And indeed, it ran into a whole bunch of extremes and gave a sell signal. The monthly upper pivot was over the quarterly. It was up 7 weeks. The weekly was above them. Basically, you had everything there that could be saying that this is overbought. Was flashing up, and it sort of took a big dive through the week. So for me, the quarterly upper pivot is down here. So if this thing really is, the Aussie dollar really is strong, well, it should be holding above this quarterly pivot by the end of March. So for me, the warning signs here, we got to the end of February, and look, it couldn't close over that upper monthly pivot. So that was a big warning to me. And now we've closed under this lower weekly pivot, and now we've got the quarterly pivot sitting here. So a failure at 73.65 end of March, and well, it could open up the downside. But converse, if that holds, well, tells you probably something about the commodity complex more generally, that maybe there's something going on.
Yeah, that was a difficult trade actually, because I took that short and it just sat there doing nothing for days. Look how long we were overextended into those levels, and it couldn't get over it. Then the sell signal comes in, and absolutely nothing happens for 4 days, when there was actually things happening in other currencies. And then suddenly it went. You wake up one morning and it's gone. So I think if you do the Canadian dollar as well, CA6, that one's quite interesting. There's a strong correlation between Canadian dollar and oil. which the market all knows about, and occasionally it breaks down, so you don't get too married to the correlation between the two. But the Canadian has been sort of stuck in sideways, as it were, and then it closed below the weekly pivot in a big way.
Yeah.
So it was very, very weak.
And very overextended on the monthly time frame as well.
Yeah. So that one's beginning to look interesting as well. It was a very, very poor close.
Indeed. Just moving on to energy sector, oil. Oil is still stuck in the same rut. It hasn't taken out any of the monthly pivots for quite a few months now. It is on a bullish bias because of the close at the end of last year. It took out the upper annual pivot in orange. So this is the one I'm talking about here. So there's the up, there's the down. We closed up here. So bullish bias until otherwise indicated. And look, we've just been bouncing between the weekly pivots. Honestly, it has not. If I look through every week here, it has not closed above or below at any stage. So frankly, it's still just bullish. Like if I look at the end of every week, it's always closed every week in the middle. It's telling you it's not going down yet, but it has got an annual buy signal. So guys, until you get information that tells you otherwise, you must go with what the higher time frame is telling you. So for me, it's still bullish, even though it's going nowhere.
Yeah, it's watching paint dry oil. Things that the market perceives to be stopping it from breaking out higher is the fact that the funds managed money is very, very long, and so I don't particularly care about that. But it means that where's the fuel to make it break higher? It needs something to, market participation. I think if you do the open interest on oil, it's possibly at an all-time high. It's very, but the thing about it is actually if it does break out, what will initially probably get it going will be short covering as opposed to fresh buying. So if there's a record fund long, by default there's the commercials or the people who produce the oil have probably got the record short. The perceived wisdom is normally that the people who produce a commodity are far better at knowing where it's going to go than the managed funds, which quite often do a pretty poor job because they're just tracking 50 or 200 day moving average or something. So there is like a limit of participation at the moment, and so if there was to be a breakout, either way, it will be one side of the market that's wrong getting out of the position, and then once that's unwound itself, then new participants come in and can extend the trend. On the year-end report that I wrote, oil potentially, if it does manage to break out higher, had a target in the low $90, so it's a long, long way away. I think it had something like 64 on the way, if I remember rightly. So not much happening up there. Hopefully at some point it will.
Here's nat gas futures quickly, another interesting one. There's the upper annual pivot. We closed well above it last year, so just goes to show you how far a market can move even though it's got a bullish bias. When we look at the pivots through here, look, it closed the month lower there, so bearish bias, but now at this stage we've got this monthly lower pivot miles below this quarterly pivot, and we're coming into a semi-annual level. So for the first time in this whole downtrend, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, we've just closed above that upper weekly pivot, and we are overextended on the downside. We have a bullish annual bias. So watch natural gas.
The other thing there is the market, because we're coming to the end of winter. It's normally a lull for the use of natural gas, so the market has a seasonal tendency, or they will think that it will go lower because we're in between natural gas for heating and natural gas for air conditioning, and so the market will be thinking, oh, it should go down because of the time of year. It's not going to, demand isn't going to pick up till, I don't know, May or June or something. So of course the market does the opposite. That's what markets do.
And the low happened to coincide with one of our support lines, so
there you go. Beautiful.
watch that space of nat gas, because the higher time frames, until they tell you otherwise, are still up. I think that'll probably do, unless there's, Shaun, is there any other markets?
No, grains were pretty quiet. There's not much happening there.
I just
well,
think
they had one mad day on Tuesday. But,
yeah, I think from memory, I remember looking at a few of these grains. Watch that quarterly pivot. If it fails there, then that's going to be, because it's kind of had a bit of a breakout lately, grains, and it kind of looks to me like that if we get a failure at that sort of quarterly level now, the quarterly pivots, then that grains could be in a bit of trouble. But just want to watch.
Yeah, I think Peter was just having a request. I did reply to his chat. Do you just want to click on your room?
Yeah. Good. Glad. It's starting to make sense, Pete. Happy to catch up soon and go through it one-on-one.
Okay, so I think we'll wrap it up there.
Yeah, let's wrap it up there. But look, here it is. That's the weekly wheat pivot at 44.47. Interested to see if we can take that out. Closed last year neutral. Hasn't done anything of note. Hasn't closed above the monthly bullish either. So really very, very indecisive is what grains are at the moment on the closing basis across time. Certainly a failure here at the end of the March will probably have me leaning towards, not running out of puff, basically.
Yeah, if you just do soybeans, ZSE, I think the point there, the funds are short wheat, not very much, but in soybeans, and I think they've had a record long position, so they're hugely long, and they look at the 200-day moving average, it just about held it. Not that we care about that, but it's interesting that they've got such a huge position, a bit like crude really. That's a huge position in a price that's actually in a short-term downtrend, so they're sort of hanging in there. But price peaked beginning of February or the end of January, and they're hanging in there. Couldn't close above the weekly pivot. We had that huge day on Tuesday. Very unusual. If you do bean oil, ZLE, it was even more dramatic there. This is algo pops in combination with the rumor. The rumor was that Trump was going to say something about ethanol production, giving some incentives, which means bean oil, more demand for bean oil. And it was just a rumor ahead of his speech. And bean oil rallied 150, 180 points in about 10 minutes. So you have a combination of a rumor, whoever started it, and then the algo pops all trip over each other. And you get this massive one-day move, and then it's really not done very much since. But for people who follow that, my professional clients trade grains a lot, and that's one of the main things that we look at. There you can see it. Yeah, there was a buy. We talked about it last week, weren't we? Because we were coming into the quarterly pivot, so it was getting overextended. And then there was a buy signal on the Friday. Yep. So
yeah, it's interesting.
And then bang, Tuesday.
Yeah, it's interesting. It's very interesting. Closed last year and under that annual pivot, overextended. Couldn't make the monthly pivots. Yeah. Okay.
Yeah,
all right.
Short-term bullish.
Better run. Thanks everyone for watching tonight. If you want to get involved, make sure you come to the website tradingsafely.com.au. Everything is there. If you want to get involved, you can just come to the buy now, or you can reach out to us on the contact. We're happy to have a chat about what we do and how we might be able to help you. So have a great week, everyone, and look forward to speaking to our clients tomorrow.
Yep. Okay. Goodbye, everyone.
Thanks, Shaun.
All right. Cheers.
Bye-bye.